And good morning and welcome to the Texas Real Estate Show. My name's Steve Williams. Normally I'm not here on behalf of Century 21, but I've got my Century 21 shirt on this morning because we had a meeting in my real estate office over in Houston. And I've got my good buddy here, Mr. James Lee. Introduce yourself, James.
How are you doing, sir? I am your resident mortgage professional, at least trying to be as much as I can to be a voice in that. But I appreciate you having me on today so we can talk about whatever it is that we're going to talk
Well, we're going to talk
about.
about the Fed. We're going to talk about the Fed.
Hey,
and
man,
and
I don't know those guys. They're not my fault. I have nothing to do with it.
I thought that was your best friends.
No, man. I don't even know Jerome Powell.
Really?
Oh, no, I don't.
Really? Okay.
But
and
he's
then
up to madness.
and then we've got a special guest on this morning, and our special guest this morning it's Tara. Tara, introduce yourself.
Oh, thank you, Stephen. Good morning. And my name is Tara Michael. I am with Century 21. I have actually been a part of Century 21 Real Estate for over 15 years and in this industry for almost 30. Won't give my start date. It'll give away my age, but I will tell you, I've seen everything, done everything, been a part of so many different organizations. And I'm so proud to be here with you today, Stephen, from Century 21 Olympian.
Okay, so tell us just an overview. Where do you think we've come the last 2 years, 3 years? What have you seen? Just to sort of let everybody know, you're over a number of offices, correct? How many offices do you oversee?
Actually, I'm over 13 different states for Century 21 here in the South. And I've got to say that, looking at what each region, we have 3 regions in our brand and what the market is doing and how that's balanced. We in the South actually perform very, very well in any kind of market. So I want to start with kind of the objective I want to end with today is let's stop watching so closely and worrying about where our real estate market is going, because we've all known a correction is coming. But in my experience over the years and years I've been in this business, I've seen you have 2 choices in this market. You can either go with the flow and do the best business that you can do, or you can sit back and wait, which only hurts your own pocketbook, right? So at the end of the day, we have to seize the moment. And it's in markets like we're in right now that people become millionaires or they become destitute. So it really is, this industry has always been about what you put into it, you get out of it. Let's focus on what we're putting into it because we know that we're going to get the best out of it. I will say too that through watching what our companies are doing right now to strategically place themselves to win in this market is a lot of fun. It's interesting. I've had a lot of great conversations with broker owners, just got off of one this morning down in Corpus Christi, that they're geared up, they're ready. They're ready to take advantage of the opportunities that a market change causes. Let's go back a couple of years though. Right after the pandemic, we saw a surge, right, in the business. And I should say pandemic starting. Right after it started, we saw a surge in this business. And that's because there was a return to home. We focused on where we live. We focused on if that doesn't fit for us. There have been even TV shows, reality shows born out of our desire to find a safe, good home that we can thrive in no matter what the circumstances may be. And so there was a lot of activity driven by individuals looking at where do they live? Do they live in an urban area and want to move more suburban or rural? Do they live in a smaller home and need more space because now they're working from home and their kids are going to school from home and things are changing? All of those changes brought activity to our market and increased our market, quite frankly, a lot faster than any of us anticipated. But one thing I want to bring up is the emotion that's now in the market. Emotion has always played a decision in any role, in any industry, but not to this degree. If we've watched what the stock market has done in the last 2 to 3 years, it is driven primarily by emotion. Even some of the best financial managers and hedge fund managers out there have gauged it wrong because it's psychological. It's not based on true value. And I'm going to go to value in the real estate industry because I think it's so important. When we talk about value, I want to talk about what I used to do when I would sell real estate. My clients valued my knowledge, my experience, everything I did for them as their real estate agent mostly was behind the scenes. So reminding your clients what you do on a daily basis to earn their business is so important today, but it's even more important because reminding them of the value that they're getting from you. And I think there's going to be a return to value. I'm already starting to see it in the numbers. I'm already starting to see it in recruiting, migration of agents, that returning to a traditional value company that provides business opportunities and business growth and business coaching to agents is coming back. We've all seen competitors come in our market, or even some of the iBuyer programs, the seller programs that you go, whoa, wow, how are they gaining traction? How are they growing? Where were they growing? Because when you can stick a sign in the yard and it closes, or it gets a contract on it by noon, even consumers don't feel like they need agents. And right now with this market change, and we're going back to a balanced, I believe, market, everything that we have provided for many, 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 many years in value to consumers is coming back to light. Even though we've always been of value, because it's not the hard part of getting the house under contract, it's actually in negotiations and getting it to close. That's the value, right? And every piece of the real estate transaction has value of having a professional handle it for you. You know, I recently asked my husband, he wanted to build a portico or an awning over his grill. He decided he was just going to go to Home Depot. He was going to buy the wood himself. He was going to just like sketch out a few plans, and he was going to go to work and build that cover for his grill. And I looked at him and I said, you know, you're not a carpenter, although you're pretty good with wood, but you're not a carpenter. Why don't you consult a professional before you start and make sure your plans are sound? Make sure that you're spending all this money investing into this, that it's going to come out to be something. A professional looked at his plans and said, this is a fail. It only cost him one consultation. And now I've convinced him to actually hire someone to do the work so that it's done correctly. And a project that would have cost us probably triple of what we're paying now, because he was just trying to do it on his own. With all the DIY out there and the videos on real estate and, hey, you can do this yourself, relying on your professionals to keep you out of financial and legal issues, that return to value has already shown it in the numbers in this business.
All right. Well, obviously, you know, you're very, we're going to sound. So basically, where do you see things going after the, you know, the issues yesterday?
Fed hike yesterday?
Yes.
Okay, so I don't know about you, Stephen, but I started selling real estate a long time ago, and the first home I sold was at 11% interest. You know, when we have, yes, one of the biggest hikes since we've had since 1994, but we also need it, and it's born out of the pandemic, born out of us printing money as a country, that inflation is starting to set in. So this is their attempt at reducing inflation. It will slow down, and actually, the beauty of it slowing down is we're going to return to a balanced market. We're going to return to a market that is fair for both the buyer and the seller. And it's going to return to a market where our expertise as real estate professionals comes to play, and your expertise as a real estate broker owner running a business that supports growing an agent's business is going to come into play. I believe we're going to go back to a balanced market. I don't believe we're going to do a full huge swing into a buyer's market, which would cause us, you know, to pop the bubble, if you will. A lot of us remember back in the recession that there was the subprime was the big, oh my gosh, reveal that popped our real estate bubble at that time. There's not a bubble. All experts that I listen to don't foresee a bubble. There has been an increase due to the massive rush on inventory, the reduction of inventory, the least amount of inventory, some in some markets, but for the most part, wherever you are in the country, it is going to be a local experience. I will speak for the South, and being a local Texan, Texas has a very stable economy. Texas actually thrives at times in inflation. Because we have such great leadership in our state, we actually do well in any type of market, economically or even in the real estate business. We happen to lead, though, the economic recovery and economic downturn. The industry itself leads the nation. So what I want to help impart to real estate agents and to consumers is that don't get nervous. Keep making your plans. When you look at the numbers and you say, okay, if we were here and there we were there, what's better for me? What's better for you is to move forward. When we are stalled by our inability to make a decision, truly a decision is being made for you. And randomly, or mostly, I should say, mostly those decisions are not good for you or your family, right? No matter if it's a business decision, no matter if it's a personal move decision, keep moving forward. This industry will continue to thrive. We will continue to see real estate agents do the best that they've done. And I can go back and use the recession and use the numbers and the statistics from that time period and tell you that our top performers in our real estate industry, our centurions, actually increased their business over 30% in a down market in the recession. How did they do that? They returned to the value of providing that value to their customers. Their customers actually really appreciate what their agents are doing for them, and they are continuing to move forward with their own personal plans. When we allow outside factors, and especially psychological, emotional factors, to determine our own decisions, we're going to lose.
Okay.
So I just encourage everybody, we're going in this direction. It has taken off of February, March, and April, quite a dip on the number of sides. But guys, the price is not declining. We may not have many multiple offers. We may not have the same days on market. Those are increasing, but the prices are not declining yet. They will. But if
Okay.
you are looking to buy and sell, you're going to be washed out even
Got you.
in any market.
And one of the things that Warren Buffett always says is if you buy a house, it's like buying a stock. You're not in it. If you're buying it for a short time, then you're going to lose money. So James, you tell us how you feel about the Fed hike yesterday, because you was the first person I called so you could explain to me about whether this would affect and how it would affect, in your opinion, as a loan officer, the housing market. And your response was?
Well, the reason I put a video out of my own, because I knew there was going to be a lot of misinformation put out there, mainly, unfortunately, from the real estate community. Because many times you have realtors that get on, they have a nice following on social media, and they get on and they hear interest rates gone up, and they automatically equate it to mortgage rates. And it's not that mortgage rates won't be affected at all, but when they're increasing rates, they're not talking about mortgage rates directly. They're talking about the money, of course, that they're lending to each other overnight. So I had to put a video out there because I started seeing posts and people, even customers, talking about how they're discouraged and they want to wait and blah, 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 and all the same old the sky is falling type stuff. But if you've been in this business any amount of time, we've gone through this cycle before. It wasn't to this magnitude, of course, but the unique position that we're in now, much to Tara's point, is that there's not a quote unquote bottom or crash that they're looking for it to happen, because it is so much more difficult to even qualify for a mortgage now. The times where it was so bad, we were giving loans to people that had no business getting a mortgage. But there's so much more things that are actually regulated, and with the supply of homes that are available right now, I just don't see it kind of bottoming out and there being a quote unquote bubble that everybody's banking on happening. It's just not that's just not what's going
So
to take
with
place.
the Fed increasing the rates 75 points yesterday, you said it affects the bond market, but it doesn't affect.
So the reason the Feds
Doesn't.
increase their rates, they're trying to slow inflation. That's what affects mortgage rates. Inflation does. So they're trying to combat that issue that we have with inflation by giving the rise on those rates. Now, they didn't expect it to be 75 basis points. The talk before, which there's a video that's actually out there where Jerome Powell said, we're not going to increase it 75 basis points. That didn't age well because that's exactly what they ended up doing. But he had they really don't have a choice. Otherwise, we're going to be in a much more economic, worse position than we are now. So they're trying to combat that inflation that we're feeling right now. And what that does is typically when you see the stock market do really, really, really bad, people are pulling their money out of stocks and they're putting them in bonds because it's a safer bet. So that's usually what happens. So in that case, when you saw that huge 600 and some odd point drop yesterday, the mortgage bonds were up 122 basis points. That's usually how it goes. Now this morning we open up and it's completely different. But it kind of jives that way. But what's happening now is, and I know Tara, you used the word correction. It's just normalizing what we've been in
Right.
in the past years. It wasn't normal. It wasn't a normal market. What's
Right.
taking place now, with the exception of these gas prices, because I've heard rumors that they're pocketing a bunch of profits, but that's neither here nor there.
Yeah.
It's just a normal market. But the issue we're running into is that the people that are on the ladder to buy now have never seen interest rates over 5% ever. So they think that the sky is falling. And should I wait? No, you shouldn't wait. Because even if interest rates come back, which they will, the
How
prices
long?
of homes are going to go. They're going to continue to go. I don't think there's going to be a bottom that everyone's waiting on to take place. It's one of those things where it's going to happen. And what you'll end up trying to qualify for today at $300,000, if you wait until next year, it'll cost you $350,000 for the same thing if you think you're going to try to wait on it. So
Right.
I say get out there and buy your home. Don't wait. If you can qualify, buy it today.
Right.
Refinance it in the future. Interest rates will come back down to where, we'll start being a little bit more favorable. But the price of this real estate, you can't bank on that because real estate is not one of those assets that it's an appreciating assets. And typically the price goes up. And all these builders need is for one of their homes to sell. And that's a new comp. So people need to understand that waiting is not the answer for sure. I don't know if
Well,
that's what you asked
and if
me.
you
but that's
look
what
at, I've got to say, I totally agree with you. And if you look at what really happened yesterday in the stock market, most of the 75 basis points increase was already priced in the market. And the reaction yesterday afternoon closing down was just an emotional reaction that has recovered and rebounded today. Right. So, you have to look at, stop looking at the macro, and start looking at the bigger picture instead of the micro markets. As a consumer, you buy and sell and stay just like you would in a stock market, but you can't live in a stock, right? You got to have a place to live. So keep moving forward with your plans because today, where the prices are today, with the interest rates where they are today, if they go forward, you're not going to turn around and sell. You're not losing value. You're not paying more than you should. I have personally bought and sold more than 10 homes in my life, and I've not once, been in a bad financial situation because of the home of when I bought it or at what interest rate. It is an appreciating asset through time that you actually live in and enjoy. I would say don't stretch beyond your means. That's what I think a lot of the problem when the subprime market was. You were right. People got loans that they had no right to borrow that kind of money. They couldn't afford it, right?
Absolutely.
And so, buying or selling today, I just had a really good friend. I had lunch with them on Saturday. Her and her fiance are so excited. They're going to be getting married. They're looking for a new home. And she looks at me and she goes, I think we should wait. These interest rates are crazy. I said, no, absolutely don't wait. Because every day you stay renting or paying another mortgage, you're wasting time and money. Make your plans, move forward, and don't fall victim to the emotional psychology of any market today. Because what's happening is post-pandemic knee-jerk reaction. And yes, the Fed had to increase. Yes, we're going to have to do some things economically. Yes, the gas prices are killing us, but you know what? Texas is also more profitable as a state. I almost said a country. Did I slip and almost say that?
We're almost
I
a
know,
country.
right? We almost should be, because of the multiple lines of business and the investment we have in oil, we are profiting you can be in a better place. In the South as a whole, you couldn't be in a better place. Don't hold up your plans to see what happens in the market, because that's an emotional reaction. Continue advising with your professionals, your attorneys, your accountants, your financial advisors, your loan officers. Talk to them. They're entrenched in this on a daily basis, and quite frankly, not sure how they can handle the roller coaster. But at the end of the day, if you continue making the good decisions for yourself and your family, you're going to come out okay. Waiting is always a debilitating decision.
All right, I'd like to sort of put you on the spot a little bit.
Sure.
For the cities that you oversee, other brokerages, if you was to say the top 10 cities, because we cover all of Texas with Texas real estate, what would you say is from number one down, as in growth, the where you witness growth in them particular cities?
The metro areas in the South have done very well during the pandemic because of the great migration from the West and from the North. I would say, we have a substantial offering here in the South that unfortunately the North and the West just don't have, and their money means more here. Our cost of living is typically lower. And what's happening is growth in the cities. The cities are going to continue to grow. Specifically, I've got to refer to Texas again because we're such a healthy state. Houston, Austin, San Antonio, Dallas are major metro areas in Texas. They are growing because of the vast, I would say, different industries we have in each one of our metro areas. There used to be a day back when I was younger in the 80s that we had you remember the oil crisis, Stephen? In the 80s in Texas, Houston, oh my goodness, was in the toilet. Houston, my mother and I and my sister were in the car sitting there waiting on gas for hours. There was a huge oil crunch, and it really devastated the Houston metropolitan area. Dallas was semi-affected. Austin wasn't affected as much because they had a different industry, but Houston was so entrenched in oil. Today, each one of our metro cities across the South have diversified their revenue. And if we can take any lesson from, let's say, financial experts today, is diversifying your revenue. Many of our brokerages across the South, I would say our top 10, the conversations I'm having right now with them is they are reinvesting back into the value for the agent, back into the tools and systems. At Century 21, we're rolling out MoxieWorks, a full suite of technology for our agents to run their business smarter and more efficiently. And most of our broker owners in that top of the tier production and profitability, they are reinvesting back into what they offer the agents, that value, because agents are coming back to them saying, I can't get my business going where I was. I'm not getting the help and support. I'm not getting what I need. And, so everything's being reinvested back in. Whereas a lot of companies today, and we see them in the news, our competitors laying off people, really making some major expense cuts. We know too, some aggregators.
Finn have just announced that they're cutting,
Absolutely.
you know,
Compass both announced, and I know of a couple others that haven't come out on the news, or I haven't seen them yet, so I'm not going to say, but it is a trend right now in the real estate business that real estate companies are cutting staff. They're cutting expenses. We also know
the difference, who the company is. It's just a shame to see, obviously, the company is being cut, and at the same time, people losing their jobs.
yeah, it is disappointing because when you have good leadership at the top of your company, like we do at Realogy, now Anywhere Real Estate, the moves they're making today are for 18 months from now, not for today. They made the moves to protect us 18 months ago so that we continue to have a job in the corporation, but we also are able to service heavier, give more support to our broker owners and our agents, and to help guide them to win in any market. And, I call it a correction because, the market we were in was not realistic. It was not a normal market. And we're correcting or rebalancing, I like to use the word too, back to a normal market where it's fair for buyers and sellers in a market. And we're not under such drastic multiple offer situation. And it's not so devastating to buyers not being able to find a home. So we are going through that correction to a more balanced market that will help our consumers move forward with their plans faster, seize the opportunity to get in a home and invest, and also just live your life. To us real estate professionals, buying and selling homes is an everyday thing, but to the typical consumer, it's a disruption in their life. It takes away from other focuses in their life, and people need to move forward, move on. When we first came out of the pandemic, everyone was a little nervous of what's going on and was afraid to move on with their life or make big decisions with their life. We need to keep moving forward. And I really believe that this is returning our real estate world. Our industry is returning to more balance, more value, and those that will do and perform well in this industry are going to be with the top companies that are pouring more resources into their companies to support their consumers, their agents, and their brokers.
I agree.
This is the time to invest, right? It's the time to invest in your companies, in your business, and in your home. And, anytime you sit out of that market, or you're not where you think you should be, you should make a change. And, with the changes that's occurring in these markets, if you're a seller, move forward, get the best and most you can for your money. And when you turn around and you flip and buy, you even out. I can go through the many, many years I've bought and sold homes and say, I woulda, shoulda, couldas. But did I walk away from each buy or sell happy with the decision I made? Absolutely. And even to this day, there are moves I made that I'm still proud I made at the time because it set me up in my own personal life for that additional growth. It's the biggest investment anyone will make in their life. Absolutely. Most people don't spend or write a check, that big a check every month and not think about what they're doing. Renting is higher than I've seen it in over 15 years.
Yeah, and rent rates have gone through the roof.
They're through the roof.
Yeah. I was talking to another agent actually from another company the other day who was saying that they've raised their monthly rent on their particular property $450 a month. And I said,
it's anywhere from 30
and I said to them how unfair I thought that was, because for a family to increase their rent $450 a month is just amazing.
And they can't afford it. And they are requiring longer contracts to lease, where you could walk in and get a 6-month contract. A lot of locations are requiring a year, year and a half, 2 years of a lease, because you know what? If you're not willing to do it, there's somebody behind you that will be willing to do it. So, and throwing that money away on a monthly basis is just a travesty. And if you're in a position that you can't buy today, there are options for you to do lease to own. Contact your real estate agents, because there are so many options out there in the market for people who feel like they're stuck in this renting cycle, so they can get into the ownership and investment. It's the #1 way we build wealth in America. is through home ownership.
Well, that's the main reason I came to Texas, to be perfectly honest. Same, I didn't know you previously, James.
Oh yeah, right.
Yeah, you know,
Yeah.
you could have done my loan for them. But when I first came to Texas with my first house, I was telling James the other day, the interest rate was 18.5%. That was back in 95.
That's nice.
Yeah, 18.5%.
I think the highest mortgage I sold was 15%.
Yeah.
And they were smiling. We were all taking pictures at closing. It was beautiful.
They seen me walking down the street. So, do you have any other questions, James?
Well, I guess from real estate perspective, we've gone through it now that we're kind of in this little bit of a slowdown. Many times, customers were having issue with listing agents discriminating, and I'm calling it that because that's the way it felt, against the type of financing that a customer was using. And it got really, really bad around here, so much to the point to where the letters that we actually issue don't have a product on there. But of course, you know that that contract, the TREC contract, doesn't bind us as far as the financing that we have to use for a customer. It just informs the other side, hey, this is what we're anticipating, blah, blah, blah. Now, we know there are some hard stops with some of the products, ownership, if it's a flip, different types of things on the property, but literally 5 to 10, I'm probably being conservative, customers, families that could not get their offer accepted because agents would not accept FHA financing or VA financing. What do you say to I guess a community of agents that really are just pushing this away just because either they're misinformed, because that was usually the case, misinformation, thinking that, you know, you can't do it because it's not going to pass or it's going to be an issue. What would you say to them as far as
As a
discriminating
listing
against
agent,
that? Yeah.
quite honestly, it wouldn't bother me personally if it was FHA or if it was conventional. But I would just want to see that in the event that if it's a multiple offer situation, that they've maybe got a little bit of funds or, you know, cash in the bank. But a lot of it depends on, back to what Tara was saying, was if you've got a good agent, and I'm going to give you an example in a bit. If you've got a good agent and you really put it back to, I recently sold a house. It was listed at $195,000. You're not going to get any houses in Houston for under $250,000.
Not one you want to
It
live
was
in.
like walking back.
Yeah.
It was
It's not livable.
it was like walking back into the 1950s.
Oh, wow.
The guy was 92 years old. They put him in a home, and he needs the funds.
Right.
You know, we had multiple offers on the property, multiple offers on the property, and I went through it, and I know it's overpriced. I know that there is going to be a future problem on the appraisal, which we're going to talk about in a bit. All right. And you know, quite honestly, I called all the agents and I said, well, I think there's going to be a problem with the appraisal. I was honest with them. I didn't want to waste their time. I said, you know, have you got the funds to cover the appraisal? And one of them, not the top offer, but the next one down, said, no problem, we'll cover the appraisal, we'll waive it. So even if it's an FHA loan, I really don't care.
Right.
But they've got the
You
money.
know, that's the right answer, Stephen. And you know the real estate law is probably better than anyone sitting on this phone or this call, because, you know, as a real estate agent, you're held to a certain ethics, and you're required to present all offers. And so in these multiple offer situations, and that's why, you know, I'm so excited about this market change. You know, people will call me and say, hey, Tara, aren't you getting stressed? Aren't you getting worried? No, I'm not, because this is when you working as a consumer with a knowledgeable and experienced agent, they are going to do things the right way, and they are going to get you where you need to go quicker, more efficiently. And here's the thing. If there was discrimination against contracts on certain financing, shame on them.
Totally agree.
Shame on them.
Totally agree.
And too bad for the consumers, because the consumers should go to somebody else. Because when you're looking at multiple offer situations, all must be presented. We have strict laws not only in Texas, but across the nation, about how that should be handled. And when it's not handled appropriately, it can be devastating to people. So, that's also why, again, I'm going to go back to, I'm excited about this market change. I am excited that we have the opportunity and the company like Century 21 to work with these experienced, knowledgeable agents with our consumers and support what they're doing, all the good work and all the leadership that they're providing. And, when we go and look at what's going to occur over the next 3 or 4 months, nobody has a crystal ball, but this returning to a more balanced market where there's not multiple offers, there's not overpriced properties that you just have to buy because you need a place to live. It's going to be a much more fair and balanced market. And I really, think that as long as we as professionals keep our eye on the fact that we're not watching just today, we're actually planning for 18 months to 24 months out, 5 years out, 10 years out. And while none of us have a crystal ball, we've all seen, if you've been in this industry long enough, people succeed in any market. We've helped consumers buy that investment property. And if they bought a property before let's say the last recession, and they're looking at selling it now, I guarantee you it's for a profit, right? So time, patience, quick, correct decision-making, non-emotional, but financially sound decisions today will lead you through the economic uncertainty and the residential real estate uncertainty. The thing I think is key is you got to get it. You got to buy, right? And put your toe in the water or purchase to even make anything on an investment. So get in the game, don't miss the boat, move forward and make your decisions. That psychology that's happening not only in the real estate market, but in the world global market today is something that you're better off taking a step back, keep an eye on the top line news, and just do your business. Because I guarantee you, there are agents sitting back and there are consumers sitting back. There are people that are going, oh, we're just going to wait and see what happens.
Yeah, one of my questions was, and it was actually going out to James.
Another one for me. All right.
If you've got regarding an appraisal, if you've got a house, I know what I'd do, but it depends which side of the fence I'm on, whether I represent the buyer or whether I represent the seller. Is if you've got a house for $300,000, you've got a $9,000 down payment. So we've got straight away we've got a difference of $291,000, and the house has been appraised and the buyer's been qualified for $271,000.
Mm-hmm.
So you're $20,000 shy. You're short of $20,000. What are the options that are open to the buyer's agent in a situation like that? Now, obviously, I know it, but I want you to explain from a loan officer's point of view, what are the options?
I want to make sure I understand you. So you said the house is for sale for 300?
Well, let's say three. I want to make it easy. It's easy math. I had something drawn out, which was basically, okay, the house is 309.
Okay.
All right, so which makes it easier. FHA loan, $9,000 down, 3%. Let's do a 3% down. So you've got basically $300,000 to finance the house. All right. The buyer's qualified for $300,000, but it only appraises for 270.
Oh, it appraises for 2. Gotcha.
So you're short of I've re-explained it with different numbers.
Got it.
So we're short $30,000.
Okay.
You as a loan officer, what are you looking for to remedy that situation if the buyer decides to move forward with purchasing that home?
Well,
the options are: one,
they make up the difference.
Okay.
They have to prove that they can pay the difference. It's interesting you bring this up because I just had this situation happen. They have to make up the difference if they want to move forward, because we're going to loan based on the $270,000 value. It's just for clarity. We don't put a mortgage on your house. We use a mortgage as collateral for the mortgage. So that is what we're doing is, and in order to make sure our collateral is covered, it's got to be worth the value that we give you. So we're not going to go above the 270. So if you want that house that badly, who knows? Maybe there's a pot of gold underneath the foundation that you're going to dig up afterwards. It might be worth paying the extra 30,000, but you've got to do it on your own. You got to fund that.
Yeah.
Second
And
thing,
most people can't come up with that extra cash, can they? Have they been,
not
have they,
not
has it
not
vested in
many.
the contract?
And I'll share you with my situation. It's anecdotal, but I'll share my situation here shortly. Second thing, go back to the negotiating table. Hey,
Which a lot of agents don't do.
They
A lot
don't.
of good agents do not do.
They don't
They
do it.
take it. They look at the numbers. Oh, they give up halfway.
They don't even try. They don't even ask. Third, you could try your hand at what is called a reconsideration of value. And a reconsideration of value essentially is going back to the appraiser with information to get them to admit that they were wrong on the value. In my 22 years of origination, I have been successful at this twice, only 2 times. I've submitted many of them, but only twice have I been successful at doing this.
I did it once, and they probably increased the value maybe $5,000.
Not enough to even be worth it, right?
It didn't really make any difference. The advice that I give to listing agents is to help the value, because to avoid problems like this, is to get yourself a little brown envelope, get your comps, do your homework. All right. Even the buyers, the buyers agents, or even, the listing, it really should be
Right.
the listing agent's job, because they've got the ones that put the value on the property and put the comps, and maybe the appraiser may decide to use them comps for that property to help you determine value. But what a lot of people forget is the appraiser is there for the bank. The appraiser's not there for the buyer or the seller.
Right. Exactly. And agents many times they say, "Oh, well, your appraiser or y'all," they don't work for us. They don't work. They're appraising the value, but they're independent of us specifically. So we have to get an appraiser, but they're not doing it. They're just giving their opinion, and it's an opinion of value. But what we ran into is so many agents were overvaluing these homes. They knew that. Let me go talk about my example. So this house was on the market for $537,300. Okay, I looked at the house. It was nothing spectacular about this house at all. It is on the water. It's in a market. It's big enough to where my guess when I told the agent, I said, this is probably going to be about, I would say probably about, if I had to guess, 480, 490 is what I said. I told, not the agent, my loan officer, when she got the contract. I said, they're probably going to have an issue with the appraiser, with the appraisal on this particular property. And she said, "Oh, you think so?" I said, "Yeah." I said, my guess, just but looking at it, 480, 490 tops is what this house. Then I go further in the contract, and sure enough, the appraisal waiver is in there. So I'm like, oh, well, they already know that there's going to be an appraisal issue with it. So they're willing to go ahead and move forward with this deal. But they kept asking me and her, because it wasn't one of my loan officers. They kept asking her about, hey, are we responsible for the difference if the house doesn't appraise? And we kept saying, yeah, you are. That's what you signed.
That's what you offered for the property.
Right. That's what you offer for the property. And in the third party financing, I think it's section 2B, you waive that one. You waive that section of it. So yeah, you are responsible. But they kept asking. Now we did a rush on the appraisal and got it back. Sure enough, 482. Like, man, I should be an appraiser. Came in at 482, and Once it came back, they started asking again. So what do we do now? You know, what are we supposed to do? I said, what do you mean? What do you do now? You pay the difference. That's what you signed in
Or
the
you
contract.
renegotiate.
Well, come
Yeah.
to find out, the appraisal waiver that they thought they signed was the one that we get sometimes in our DU system that says, hey, Fannie Mae will say, we don't need an appraisal on this property because there's enough value. They put enough money down. We sometimes get an automated decision to say that we don't have to get an appraisal on the property. Two totally different things. But the agent never explained that to them. So this whole time they signed this contract, they don't know that they've got to come up with the difference if this home doesn't appraise.
The agent never explained.
Never explained it. They had no clue. Once I got on the phone with them, they had no clue that's what they signed on that document. I said, that's unfortunate, but that is what you signed. Now, luckily, they were putting enough money